Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, September 10th, 2018. So here we are, people. Right now, this market is kind of stuck in this eerie quiet mode. It's just kind of waiting for something to happen. Stocks are higher. As I am doing this video blog, I did outline for all of you yesterday in my Markets A Look Ahead segment that I believe this week stocks are going to be positive or have at least a positive bias this week. Now, if you were to go look at the bond market chart on my website, traderschoice.net, there's a link in the description of this video. A small amount of buying is occurring right now, and as I said in the video yesterday, this week they are going to prop up the bond market. They have no choice. Again, I mean, there is no way on this earth or off this earth that they will allow bonds or the debt market to normalize. It can't do that. They cannot allow it in any way, shape, or form to have an actual price discovery mechanism behind it, which means the Fed, other world central banks will continue to suppress rates to force cash into stocks. Now, let's cover a couple of other assets. The dollar right now is under a little bit of pressure. Gold and silver are up fractionally on that weaker dollar, of course. Cryptocurrencies are still under pressure, not as much as they were over the last several days, but a little bit. So we'll see how that plays out. I did write a whole article about this recently. So it looks to me like, at least right now, it's kind of early here. It's 7 a.m. Pacific Standard Time. The market's waiting for something to happen. You're waiting for a word, waiting for some propping up of the bond market, something. And we'll see what that does. But I am relatively confident that, again, with midterms here right around the corner, the illusion must be kept real. Meaning, they're not going to allow anything to happen to the market at this point. It's going to be managed in the way that it's been managed. That means propping up the bond market, forcing cash into stocks, distorting asset prices worse than they are right now, which is hard to believe, which means more debt, and it's such an incredible situation here. People are absolutely lost, I think, not just here in the United States, but everywhere, because what we're allowing to happen, we're really almost like signing our own death warrant by allowing world central banks colluding with their respective leaders to continue to bury us under a mountain of debt. We keep hearing about how the American consumer is doing so well. Really? We've never been here before with regard to debt. It's unbelievable. Personal debt, too. It's not just, national debt. This is a credit card. People don't seem to, they think the party's never going to end, and they're just going to continue doing what they're doing. And then when this whole thing whips around, they're going to sit there and go, well, what happened? Well, they did it to themselves. People are doing this to themselves. And it's a sad situation, it really is. All right, look, with that said, let's keep an eye on this market. But number one, keep your eye on that bond market chart. Again, there's a live chart of this right on my website. There's a link in the description of this video. Right side of the page under the chat room. Look what they're doing now. A little bit of, like, they're almost getting ready to start some hardcore propping up. And that's what I'm expecting to happen this week. Bond market will not be allowed to normalize. They will keep doing whatever they got to do to keep rates low, despite the fact, like I said, we're going to get a 25 basis point hike to the federal funds rate this month. Anyway, we'll sum this up all at the end of the day.